So let me ask you something. What if the daily news, all the expert analysis we follow, what if it has basically nothing to do with why markets really move? Today, we're going to dive into this pretty radical 40-year experiment that went looking for a hidden pattern, a sort of celestial architecture, you might call it, that could be secretly driving our entire financial world. And this right here, this was the core idea that kicks the whole thing off. The thought that maybe, just maybe, market news is all just noise, and that something deeper, this collective mood of the market, was the actual engine. It's a heck of a puzzle, and it's what launched a 4-decade-long quest to figure out what that hidden force could be. All right, so our story starts on the trading floor of Merrill Lynch, way back in the early 1980s, and it starts with a young stockbroker named Ali Mostofi. So being right there on the front lines, Mostofi started noticing something that it didn't add up. You'd have great news hit the wires and the market would tank. Or, on a super quiet day with zero news, it would suddenly just surge. It was almost like the market was marching to the beat of a completely different drum, one that just defied all the conventional logic he was supposed to follow. Now, this little hunch didn't just fade away. Oh no, it became the central idea, the main hypothesis, for what would eventually turn into a lifelong research project, a massive, massive undertaking to see if this strange anomaly was actually real. And listen, this wasn't some flash-in-the-pan idea. That initial observation back in the 80s, it led to decades of really methodical work. The 90s were all about building the data models. The 2000s were spent just grinding, testing correlations against all the major indices. Then the 2010s were for refining the whole system, all of which leads us to what's now called the Citystats project. Let's just pause on that number for a second. 40 years. That is a lifetime dedicated to collecting, analyzing, and fine-tuning data, all based on a single idea. I mean, whatever you think of the premise, that level of commitment alone makes this a serious data science endeavor, and it's definitely worth taking a closer look at. Okay, so what was he looking at for all those years, right? What were these unconventional data sources that were feeding this massive correlation engine? So here are the two core inputs. First, you have planetary positions. And let's be super clear, this is not astrology. We're talking about the pure mathematics of their angles and their positions relative to Earth. And second, geomagnetic activity, things like sunspots, with data sourced from official agencies like NOAA. The system's entire purpose was to find statistical links between this cosmic data and the daily wiggles of indices like the Dow Jones. And this is maybe the most crucial point to get. The whole project is purely a study in correlation. It doesn't claim that, Jupiter causes a market rally. It's simply looking for a consistent mathematical relationship, a pattern where these two totally different data sets just seem to move in sync over very long periods of time. So that brings up a really important question. You have this giant complex engine. How does it produce something a trader can actually use? With all this cosmic data and market history, what does it all really boil down to? And this is where it gets kind of elegant. The system's main job is distillation. It's designed to take all that incredible complexity and just boil it all down into a super simple binary output. All the data gets crunched to produce just one signal for any given time period, a U for up or a D for down. That's it. And the output is surprisingly specific. We're not talking about a vague prediction for the month. The system actually generates these U or D signals at a really high resolution, 15-minute frequency. It's designed specifically to track those short-term swings in the market. The whole point of this UD signal is to act as a leading indicator. The goal is to give a trader a little glimpse of that turn in the road, maybe moments before the market itself actually makes the move. It's all about trying to anticipate that subtle shift in the market's mood. So let's zoom out a bit. After this whole 4-decade journey, what's the big takeaway? What does this massive, really unconventional experiment truly represent? Well, when you break it all down, it really represents a classic scientific journey, right? It starts with observing something weird, an anomaly that doesn't fit the current models. That leads to a new hypothesis, which then gets tested against decades of data. A model is built from that data, and finally, the whole complicated system is distilled into one simple, usable signal. It's basically the scientific method, just applied to a really unconventional problem. And in the end, that's what this is. When you strip everything else away, the Citystats project is presented as a lifelong data science experiment. It's a 40-year attempt to answer one single question. Are there hidden, predictable, cosmic cycles that are reflected in the chaos of the financial markets? And that leaves us with a really fascinating final thought. We live in a world that is just overflowing with data in biology, in social media trends, even in climate patterns. So if one person's 40-year experiment could go looking for cosmic cycles in the markets, it really makes you wonder, where else might these hidden patterns, these unheard melodies be waiting to be discovered?